What's up, guys? So today I want to talk to you about how this is a business. All right, you guys, you're not going to get a paycheck every few weeks. You're not going to, this isn't some 9 to 5. You're going to get paid when you actually do the work. You're going to get paid when the job is done. That's the point of this, is to finish the job. That's when you're going to get a paycheck. So it's a very different way of thinking when you're jumping into this full force and you're not doing a 9 to 5 and this is your only sort of income. You have to think very, very differently than when you normally did. There is no paycheck every single month. There is no paycheck every 2 weeks. The paycheck is going to happen when you close a deal. When you get stuff done, that's when you're going to get paid. On top of that, this is a business. You're now a business owner. You don't necessarily have to go get a business license for this, but this is a business. So you have to realize, hey, when you guys do something, you have to treat this as if it is your business, not just a paycheck. So in order to do that, one of the first things that you should go out and do, in my opinion, and this is how I do it, this is how a lot of other people do it, is go get a bank account that is strictly for your business. So all of the expenses, all of your paychecks are going to run through this business account. And then once you divvy out your expenses, you put money into savings that you could do for marketing and everything else, then pay yourself. Then transfer money from that bank account into your personal bank account. And now that's your money. That's your money for your bills, for your house bills, your play money, and all that stuff. But you want to first put it in your business, because that's also how you're going to run taxes. At the end of the year, you're self-employed. You're not going to have you're not going to have a company taking taxes out of your paycheck every day. You're going to get a paycheck, and you're going to get 100% of that paycheck, which means that you have to file for taxes at the end of the year, or pay them quarterly, however you plan to do it. So in order to do that, if you keep your personal bank account, put all your money in your personal bank account, and then take money out and say, oh, well, this was a personal expense, this was a business expense, this was personal, this was business. I drove 100 miles one day, and it was all business related. And then all of this driving the other day was all personal. It's really hard to keep track of all of that stuff, where in the slightest chance that you ever do get audited, it's a little difficult to do and make sure that you track everything easily. If you do it with my system, you have a business account where all the money goes into, and then you pay yourself in a lump sum, and then everything else stays within your business account for your business expenses and for tax reasons and everything else. I personally think it's a lot easier to work with tax-wise, and just to keep track of how much money is going everywhere. I think it's easier for you. It's easier for the government if you were to ever get audited. The other thing is your expenses. What are business expenses? And it's pretty funny. Business expenses can be a lot of different things. So you're going to be primarily working from home, where you're going to be on your computer. You're going to be using your phone. You're going to be, in some places, your internet. You might be able to do part of your electricity bills are all things that you need for your expenses. There's stuff that you need for your business. Now, again, this may vary state to state. So where I'm from, I can do one thing. In another state, the rules might be just slightly different. So definitely talk to a tax expert in your state. Again, I know where I'm from, but make sure you check someone in your state to see exactly how that's going to work. But you can write off all of that stuff as a business expense because you're working in your house primarily. You're going to be on your computer looking at properties, talking to other people. So you're going to need your phone. You're going to need internet. You're going to need electricity. You can write off a percentage of that. You're also going to be driving to different properties all the time. You're going to be networking and meeting other people. So networking, you take someone out to dinner or lunch to meet them, to see what they're about and everything. That's a business expense. That's a dinner, but it's a business expense. If you go driving to a bunch of properties, track your gas, track your mileage. Those are business expense travels. So therefore, you get to write that off. If you buy gas in the in the beginning of the day, you run out of gas at the end of the day, you use your entire tank and you fill it up. That entire tank is a business expense. It might only be $30, $50, whatever it is. But if you do that, every few weeks, there's a lot of money at the end of the year. And that's a lot of money that you can write off. So really keep track of all of your business expenses, any sort of marketing. If you decide to get business cards, or if you decide to get lawn signs, if you do online marketing, whatever your type of marketing is that you guys are going to be doing, all of that is business expense. So personally, I like spreadsheets. I do spreadsheets for absolutely everything. My daily goals have a spreadsheet. My productivity has a spreadsheet. Making videos has a spreadsheet. Everything has a spreadsheet because that's how I like to keep track of everything. My expenses are no different. I have a date of when I bought something, exactly what I bought, and how much it was. And then at the bottom, I have a total. I also have my income in there, the date, who the client was, or what income it was, and then how much income. And at the very bottom, I tally it all up, and I know exactly how much money I made at the end of the year on paper. And I always think if I can get below a certain amount where the government doesn't want me to pay taxes, I did a great job. That's always my goal. But keeping track of everything is the best way. If you do it once a month, you're going to forget about a lot of expenses. Make sure you keep up on your expenses every single time that you buy something for that business. Make sure you write it down somewhere. Again, I like just Excel sheets. It's really clear to me. It's easy. You might prefer something else. Whatever it is, make sure that you find something that keeps you organized and you keep up to date with it. That's the most important thing, is staying up to date. The other thing, like I was saying before, when you do this bank account, I always say pay the business first. Pay yourself last. So what I mean by that is if you do what the normal thing is when you're first starting out, you get a paycheck in your personal bank account, you pay your bills, you go out to dinner, you go out to the movies, you do some stuff, and then you think, you know what, I should market myself a little bit more. I need to do more business. I'm going to market myself. And you say, oh, well, I only have $200 right now to market. $200, depending on what you're doing, could get you a lot of marketing. Or it could get you very, very little. All depends on what type of marketing you're doing. So what I like to do is I like to pay my business first. So what I mean by that is I say, okay, my paycheck goes into my business account, and I know 30% of that's going to taxes. So 30% of that goes into a savings account for my business, not a personal savings account, a business savings account. 30% of that goes in for taxes. And then my business checking account, which is where I'm going to be changing all of my expenses. That's where my expenses come from. I'm going to say, okay, I want to spend $500 this month on marketing, or whatever your number is. Maybe it's only $100. Maybe it's $10,000. Who knows? I want to spend X number of dollars in marketing, which means that I need X number of dollars in my checking account for the business. And of course, you always want to have more than what you want to spend. You don't want to only say, I'm going to spend $1,000 this month and keep $1,000 in your checking. If you want to spend $1,000, put in $1,500. Make sure you always have some extra in there. And now the rest of the money that I just made, that's now my money. Now I can say, okay, this is for my bills. This is for my entertainment, my personal stuff, whatever I want to buy. Whereas now this way, my business is covered. My taxes are covered. My business is not going to go under. And I paid my bills. My bills are very important. But if I'm now out of money, then I just don't do the extra stuff that I want to do. But that's okay, because my business is still running. If you do it the other way, where you pay yourself first, and you say, hey, here are all my bills, and I want to do all of this stuff. I want to go on vacation. I want to buy this and buy this. And then you say, oh, I have no money for the business. Well, the business is now bleeding, your business is dying without any sort of funding. So you need to make sure that you pay your business first before you pay yourself. And eventually your business is going to get so big that you're going to be able to pay yourself very, very easily you're going to be making money hand over fist. And you're going to be making money so much that you don't have to worry about it. But you still want to pay that business first. So when it comes to starting in this career and starting the job like this, you really need to switch your mindset from working a 9 to 5 to being self-employed and doing everything on your own. It's a different mindset and it's a different way of using your money. So just make sure that you look how that works. If you guys have any questions, always feel free to reach out. We'll talk soon.